Welcome back. You're watching Money, Money, Money. And this week we are discussing new age ULIPs. These are called 4G ULIPs. They're coming with lower charges. And maybe you should ask your financial advisor whether it merits a little bit of money being put into them as well. Kshitij Mahajan is with me on the show this week. Kshitij, so we were discussing advantages of ULIPs. Charges are low. I'm sold on that.
Right.
The second you said tax. It's a big clincher, no doubt about that.
Right.
What are the other reasons why someone should look at a ULIP?
So dual benefit. One is obviously you are having an investment part which is going in, and second is that we have a cover of 10 times of whatever premium you're paying. So let's say somebody is paying 50,000, he has a cover of 5 lakh rupees. So it's a dual benefit at a cost of a normal mutual fund.
Yeah, but don't get carried away with the insurance benefit. I mean, 5 lakhs of life cover would be a bit of a joke, right?
So you're right. I'm saying for insurance benefit, you'll get term insurance only. But I'm saying by participating in this, and I'm saying again, this is not meant for your investment purpose only. It is meant for those people who are maybe a bank deposit, who are basically having their assets in bank deposit, who want to move out of bank deposit to move into a better tax efficient tool. So this tool can be looked at.
Definitely,
So
definitely from a tax efficiency point of view.
The tax efficiency, locking period is only 5 years. It's not like a normal traditional plan where you have to lock in for 20-25 years or maybe during the lifetime of the period of your money which you're participating. So it's only 5 years. That's another which is very important benefit which is there. So these are the key benefits which ULIPs offers.
Okay, so then let's take it a step further. If you could give us an illustration, typically to a middle risk or medium risk investor, how much money would you think can be set aside into a ULIP? And typically, what are the kind of returns you can expect from this product?
So basically, one can actually look at participating because that gives you tax benefit also.
Yeah.
So you can choose between your mutual fund allocation, which is there, but the deposit which you are having in your bank, you can actually start participating some portion into this.
Some
allocation.
of your FDs, you're saying maybe you can start parking them in
maybe let's say
ULIPs.
20-25%, because going down the line, so what is going to happen? The deposit rates will go further down.
That's true.
Somebody who's at 20%, 30% tax bracket with 6.5% of FD rates, you get hardly anything, maybe 4%, 4.5% post-tax. So my suggestion is anybody who's earning, let's say, 50,000 on a monthly basis can actually start looking at participating 5,000 on a monthly basis to ULIP, which can make it 60,000. If he can't do it 5,000, he can start with 3,000 also. Okay. So that's the amount which you can look at. Let's say somebody is doing 50,000 on a yearly basis. That means the premium which is paying on a yearly basis will give him 10 times cover. That's an advantage, which is one which is there. Yeah. Obviously, for his life cover, he should have a term insurance, which is a separate plan.
But if he is investing 50,000 in a year, so 10 times cover, 5 lakhs becomes your life cover.
5 lakh becomes your life cover. One is this.
Yeah.
So let's say out of 50,000, there is an allocation charges of 2,500 rupees, which I said, let's say on a higher side is 5%, which I'm saying, which is on a very higher side, I'm saying. So normally it has gone down to 2.5%, but let's say 2,500. Then you remain with your investment amount of 47,500. Okay. And let's say if 10 rupees is the first value of the unit which you get, when you're investing into your ULIP, then you get close to about 4,750 units. That's what you are getting, which is going to get invested. Now, let's take a scenario. The policy term is for 10 years. And, something happened to the person who's covered under this policy after 6 years. Then either fund value, whatever is the fund value of his investment, in 6 years, if he's given, let's say, 3 lakh rupees and the fund value is 4 lakh rupees, or his cover, which is 5 lakh rupees. Whichever is higher has been paid to the client.
So you know that at least 5 lakhs you're going to get.
At least 5 lakhs.
And if your investment has really appreciated very well, and if it's crossed 5 lakhs, then you'll get the fund value.
Whatever is higher is going to get. And if you have covered the entire term of ULIP, then your fund value you'll get.
The fund value
you'll get.
Which obviously should be higher than your sum assured.
Then you ask about the type of returns. Somebody who's participating into 75-80% of the equity portfolio, let's say 20% debt and 75-80% equity portfolio, one can expect a return which is as good as 9 to 10%. Which is tax-free. So
now that's why I come down to products, because it will come down to the sort of ULIP you're choosing, the efficiency of the fund manager there, supposing you're going to opt for all equity plans. Who are the guys who are generating good returns? So which are the ULIPs that you'd recommend?
So there are a lot of ULIPs in the market, but if you actually ask me, a couple of them which I can recommend from my side, and I'll request all the clients to do their due diligence at their end.
Absolutely.
So this is what I like, but they can look at their needs and
do the comparison.
Do the comparison. So So one is, it's from Bajaj, which is Bajaj Future Wealth Gain.
Okay.
Bajaj Alliance. And second is from your HDFC, which is HDFC like Click to Wealth. These are the two ULIPs.
What are the kind of returns that their equity plans are generating?
So if you actually see all the returns which in the past they have done is close to about 9 to 10%. That's what. If 100% equity, some of them have generated 11, 12% also.
Okay.
That's what they have done. So, and if you see the portfolios, you know, the interesting part about most of the ULIP equity portfolios, they are keeping it very simple. They're very clear that it has dual purpose. So let's keep it simple. You'll see HDFCs of the world, you see Bajaj Finance of the world, you see ICICI of the world, one of the IT companies, that type of portfolios. But it is very much available. It's as transparent as mutual fund. So that's a term I should use for all the ULIPs. They are as transparent as mutual fund. They have a fact sheet. They have each and every fund, what type of portfolio, equity
so you can know
have.
exactly what stock is going in your ULIP.
What that fund, what that instrument, what stock they are buying, what percentage allocation is there. They are as transparent.
You simply go on the manufacturer's website and you'll find
you'll find
everything.
Data. You'll find everything.
Okay.
So my request to all clients, don't confuse mutual fund with their insurance ULIP part. This is for those clients who are not into who are not in mutual fund till date, and they want to have little better return than what they are earning in fixed deposit. They can actually start looking at this side of the portfolio.
Yeah.
So one is this. Second is your, you know, if you actually see the allocation charges, anything which is more than 3 lakh rupees in Bajaj, you know, a plan, there is no allocation charges.
Okay.
There's zero allocation charges.
Okay.
For HDFC, there's zero allocation charges. Again, if you complete the term, in both the cases, the mortality charges will be returned back to the client.
Okay.
So again, a benefit to the client. So everything has been kept very low. So on an average, the cost of these funds will be not more than 1.3 to 1.35%.
Very interesting. There you have it. I mean, yes, I think with time people change and industry evolves, changes, and it seems now if there are good products that are coming out in the market, then you might want to do your own due diligence and check with your financial advisor whether these new age ULIPs really suit you or not. We're going to take a quick break on that note. Now, till now we were talking about the investment products which the insurance industry is offering you. After the break, we switch things around.